Good evening, friends. Hope all are doing good and enjoying our podcast. Thanks for your wonderful feedbacks, messages, comments, and your likings of our videos. So today we are continuing the session on why we need one certified and right financial advisor, or maybe mutual fund advisor. Okay. Without them, can't we do our own investments? Or maybe can't we track ourselves? Okay. Why we need the advisor? What is the role of the advisor here? So that's we will see with some examples. Let me share my screen. Here I have taken the one of the famous mutual fund company, Aditya Birla Sun Life, and the fund name is the FlexiCap Fund. Okay. See, this is just we are taking for the example. Okay, we are not degrading or we are not telling whether it is good fund or not. Okay. So what we are doing with this thing? Suppose we started one SIP monthly 10,000 rupees. So maybe we done the 12 months investment. That's the total amount is the 1,20,000. So maybe we started this investment on 2000 a year. Okay. So that time unit value cost is the 37.75 paisa. Okay. So we will see in the other videos like what is this units, what is this in NAV. Okay, that calculations also will try to provide in the or explain in the different videos. Okay. So as per that, the value has been increased to the 1,24,340. So maybe we got the some returns over here for this 1 year. Okay. Based on this particular NAV, we got the number of units as the around 3,294. Okay. So this we done on the August 2000. Okay. This is the initial investment we done for 1 year. So monthly 10,000 kind of thing. Okay. Second year, what happened? Just check it out. By completion of the second year, see our investment become the 2,40,000. Okay. That time the NAV has been decreased to the 22 rupees 72 paisa. Okay. Because of that, what happens to our valuation? Instead of our 2,40,000, the current value is the 1,68,431 only. Okay. So maybe units has been increased here, but because of some performance issues here, or maybe that time market is down, or maybe whatever the reason it's maybe. Okay. So our valuation has been decreased here. Okay. This has happened within 1 year itself. Okay. Suppose I consider third year. Third year also same situation here. See, my total investment become the 3,60,000, but my value is the 3,11,136 only. Okay. See, most of the people, what they will do, this kind of scenario happen in the second year itself. People will be withdrawn their amounts and moving out from the mutual funds, or maybe they will moving out from this particular scheme or this particular fund. Okay. I don't think so. After second year, people will be stay back and they will do the, I mean, they want to test their patience or maybe they want to show their guts over here. Okay. So maybe we think some people has been continued here. Whoever understand these markets or maybe who understand this volatility and what is the risk exists in the mutual funds and all. Okay. So based on that, maybe we are thinking third year also, at least some people are continuing. But third year also same situation here. So how we can expect people will be continue in this scheme, right? Just check it out what happens on the next year. See, fourth year our entire investment become the 4,80,000. Okay, what is the value by the time? 6,48,444 rupees. See, previous 2 years, it's went to the negative returns. That is a very drastic change. When compared to the first year, whatever the returns we got, second year and third year, it's a more negatives only actually. But fourth year, it has been picked up, and whatever you are invested and whatever the loss we are thinking that's happened in the previous years, everything has been recovered here. Okay, just check it out what happens to the next years. See, 6 lakhs, our total investment, that's become the 11 lakhs 25,000 change. Okay, that time also we are in the profit. 7, if you are taking the another time period, 10 years. Okay, so total investment become the 12 lakhs. What is the entire value? 51 lakhs. Okay, where is 12 lakhs? How it's become the 51 lakhs? Okay, see, this is what the benefits are happening in the mutual funds. With the small amounts, you are getting the huge returns here. Okay, but if you are considering other assets, right? There, first of all, your investment capital amounts, these things should be very more. The small, these kind of amounts like 10,000, 5,000, these and all. See, maybe some people, they feel it is not a small amount. Okay, I can understand. Maybe some people, it will be bigger amount only, even 10,000, 5,000 amount. But even lesser than that also, we have the option, right? In the mutual fund, we can invest. Right. Maybe the same thing you can apply to the 1,000 rupees investment also per month instead of 10,000. That time also, probably you are in the 5 lakhs kind of a benefit only, right? Maybe your total investment will be 1 lakh 20,000, but your total value is become the 5 lakhs, right? So maybe the people are continuing for the at least 22 years, 20 years like that. Okay, what is the valuation here? Our total investment is the 27 lakhs. What is the value? 3 crores of rupees. Okay, out of 22 years investment. Okay, see how the time period you are giving to the your investment, that level, that much of compounding we are able to enjoy. That doesn't mean you have to keep the each and every investment for 20 years, 25 years, 30 years, and like that. See, people generally what happen if you are taking the current statistics from the all the companies, whatever they are giving, based on their investors' mentality, strategy, how they emotionally they are playing here. Okay, based on all these things, all the companies telling the investors are not staying in the mutual funds more than 1.5 year or 2 years. If they are getting the profits, also they are coming out. By any chance, they seen these kind of scenarios, right? Then also they are coming out. So then where they are able to build the wealth? So that's the reason only handhold is required here. Okay, that handhold will be happens from the certified and right financial advisor. If you want to enjoy the whatever the exact fruitfulness, so you require the advisory from the and handhold from the certified and right financial advisor. Otherwise, you can't enjoy these kind of benefits. We can treat the mutual funds as the asset only. It should not keep for the just short-term returns and just 2 years or 3 years returns kind of thing. That's up to you. Whether you want for the short-term returns, you can take it up. There is no problem at all. Sometimes we are having the short-term goals also. Sometimes we are having the long-term goals also. Maybe these kind of things, maybe you can give the time period of 20 years like that for your retirement purpose as well. Just you only think of just if I have the just 27 lakhs rupees amount out of 22 years investment, where I can get this crores of rupees. What is the possibility? What is the security? Okay. So overall, we got the 18% returns per annum. Is calling as the CAGR, compound annually growth rate. Okay. And if you are talking the NAVs wise also, see, maybe we started with the 30 rupees or 23 rupees like that. Okay, by 2022, it's increased to the 1,135 rupees. That's the reason only our total valuation has been increased here. Okay, even we can see the multiple examples. It's not only Aditya Birla. See, actually, this Nippon India has been merged company of the Reliance. Okay. So here also we done the 10,000 rupees investment per month. Okay, that time when the fund is starting, right, that time it will have the just a 10 rupees only NAV. So even that kind of things also we'll discuss in the other videos. What is this NAV and why it will be 10 rupees only. Okay. So here also we given the certain time period, like around 27 years for this Franklin India Prima Fund. Okay. Just check it out. Totally we invested around 33 lakhs 40,000 out of this 27 years, right? How much purpose it has been created? 13 crores. What is the returns it has been worked for us? Yes, 21% it has been worked for us. See, here also we have some negative returns, maybe in the after 3 years, after 5 years, right? What we have invested and what is the value. Here also what we invested, what is the value after 5 years. And there is once again it's happened at the 2009 also same kind of problem. I think maybe here it is increased. Where is the other problem came here? Yeah, just 2 years only the problem came here in this fund. Okay, so we can't say exactly maybe this kind of negative returns can it happen in the first year or second year or third year or maybe seventh year or 8th year. Okay, no one can predict it. Okay, so what about the other example? Here we are taking the Nippon India Growth Fund only. This we are talking this is the father kind of fund to the all the mutual funds. Okay, father of mutual funds we can say. This fund is always example only. It's always stood in the top one position only. So where it is giving the that kind of example is the if you are standing for a long time in the mutual funds, how the wonders we can create. Okay, so that Franklin India also one of the best examples only. Okay, here also the 1995 we started the 10,000 SIP per month, and that time the NAV is the 10 rupees here. Okay, so after how many years here? Around 27 years I feel, right? 27 years. So what is the total investment? 32 lakhs change, right? What is the corpus it's created? 14 crores. What is the returns it is generated? 22.47 CAGR. Right, here is just the second year we faced the problem, and after that around 13th year also we faced the problem. There's a negative returns. Right, so in these kind of situations, see, no one will be continue there. Obviously they will come out. But what happened at the end here? That doesn't mean whatever the fund you are selecting and you are staying back 20 years, 25 years, so obviously you will get the profit. Okay, this has to be reviewed every year. We need to check it out whether the same fund we need to continue or not. Okay, maybe we need to change our strategy. That's the reason only advisor required here. The handhold is required here. So otherwise you can't enjoy the whatever the final returns. It has to come and you supposed to enjoy those things. And once again, I'm keep on telling, there is no need always you have to maintain the 20 years, 25 years like that. Okay. So when you are discussing with the certified and right financial advisor, you will come to know how many years probably we can keep based on our goals. Okay. Based on the duration and what is our investment capacity. All these different parameters we will consider, and based on that we will suggest you. See, even you can check it out. If you take any kind of sportsman or any person, whoever the richest person in the world, right? They will maintain the one mentor. Whatever the name we are calling, whether it is coach or mentor or guru, master, whatever it's maybe. Like how olden days kings are maintaining different kind of ministers for the different departments. Why they are maintaining like that? Why he is maintaining the main minister? See, obviously every person required some advice, and even their handhold also required. Okay, Otherwise, what happens? You can't enjoy the whatever the final result you're supposed to enjoy. Okay. So the summary is the whoever the person, whether they know all the things or not, okay, how the rich people they are delegating their financial matters to the certified people and right advisors. Okay. Similarly, you need to take the help from the advisors like me. Okay. Otherwise, what happened? You don't know how many years you need to continue in the mutual funds wherever you done the investments, and by any chance any negative returns are coming. So what we need to do? So unnecessarily you are coming out from the that market and you are losing the whatever the profits you're supposed to get and enjoy. Okay. So hope you are understanding the point. Please do the like and support our podcasts. Okay. And share with your nears and dears also. And please do the comments as well and your valuable suggestions as well. Thank you. Thanks a lot. Thanks a lot.